Hello everyone, welcome to another weekly market review. Today is the 13th of April 2020. We're in a very interesting place in both crypto and the traditional markets. Let's look at what opportunities we have right in front of us. Here's the total market cap chart. So this is the weekly level. This is the last review, the end of March. We had reclaimed this, and I was highlighting how important this weekly level is because we went support, smashed below it, tested it as resistance, went back above, and retested it as support right here. Before we smashed right through it, we did not stop anywhere on this big move down. But essentially, now what we have done is we have made a move back up, and even on the end of March review, what I was looking for was for a retest of this level to confirm this as support. So on a lower time frame, let's just go to a 4-hour. So on the 4-hour, what we can see is that we tried to reclaim this 200 billion psychological level and a weekly level. We consolidated here for 2 or 3 days. We did not hold this. We smashed back below it, tested it as resistance, and we've made a lower low again. So the most likely scenario would be first to test this 180 level, and essentially either we bleed right down and make a test from here and break it, because now we have to kind of gauge on what time frame is this move manifesting, this move down, this correction, so to say. Is it if it is on the 4-hour, if this move is manifesting on the 4-hour time frame, it is more likely that this 180 level could hold. You can see that on the weekly, the last time that this 180 held, we did get some wicks down to 160, 165. So if this move is on just the 4-hour time frame, it is probable that this test down to 180 that can hold. Maybe we get some wicks, but instead of this timeline down, we could move back up. So if this is on the 4-hour, it is possible that we could play out something like this. But I would say that if this is a higher time frame move, if it is a daily, then we could be testing possibly lower levels, at least the 0.5 fib, take out these lows. There's equal lows over here, and this 150 weekly level, not only does it have the golden pocket, but it has a lot of confluence. So if price does eventually play out on the daily, if it does eventually play out on a daily time frame, then it is very probable that these lows, this 155, could be challenged, and this 150 level is very strong support for me. And I think even a higher time frame test, this is something that can give a good reaction. So we have to gauge that. We have to see this move down that we've just had, what time frame it plays out on. And essentially this doesn't need to just bleed down right here. What I would really be looking at is, I would show that game plan on BTC, but it is possible that we get a slight bounce before making that test of the 180 and possibly lower. So I think for me right now, this is the most favored scenario, because on BTC we've swept some clean levels over here. So at least a bit of a bounce before testing this 180 level, and then we can evaluate what would happen if this is the scenario, that we hold this 180 after having some wicks and move up, or we smash right through it and we're ready to at least challenge these lows here, the 0.5 on the total market cap, and if that is not to hold, then the 150 level. But for now, yes, we have failed to hold a weekly reclaim, and we've tested it as resistance on the total market cap. So for me, this looks good for some kind of chop and a sideways before testing 180 billion. So here's the altcoin market cap and the end of March review. I had mentioned that we failed to reclaim this 62 billion level on the weekly time frame, but the next week we did end up claiming it and making a big move up. But you can see we failed to reclaim the next weekly, and this weekly candle does reflect that there is a decent amount of supply up here, and most logically first we would like for this 62 billion to hold. But like I said, for the total market cap, it is more probable, and as a weekly support, this 60 billion level is something that is stronger. Let's just go to a lower time frame. So on the daily, you can see like this channel play was perfect. Once we had reclaimed this channel, it was a decent play to be looking for upside, because we had not only traded within it, but very nicely moved outside of it as well. So for now, let me just pull out a fib right here. Yeah, for now we're finding support at a decent level of confluence. This 0.5 level along with this weekly level is looking like a place which has good support. We have a daily block here as well, so we have found some kind of confluence here for a reaction. This does give some kind of support to what I was thinking for total market cap as well. But yeah, just like the total market cap, what we would like is for price to come back down on a higher time frame and test some strong weekly levels to confirm them. So you can see the 0.5 of the entire move. Altcoin market cap is always pretty attracted to this 0.5 level. Is the 2020 yearly open. This is 2020 yearly open, I want to stress, is not only just a yearly open, but it is also the open of the decade. So once crypto is trading for longer, and especially if we are to move around this range, this level becomes a very, very important level. So yes, for now we have found some good confluence on a lower time frame over here, but if this move is to play out on a higher time frame, first the 58 billion level, but also the 2020 yearly open, these are two big levels that I'd be looking for when price is trading down. And to trade this down, I would like for price to move up. We have this small range here, so if we get rejected from something like 66 67 billion, even maybe another retest of this weekly level that we tested as support, broke it, tested as resistance, we faked above it and broke back down. So a test of this 68 billion or these highs up here 67, this is still a probability for me, but eventually I would like either this 62 billion, but more likely this 58 and 55 billion level. These are the two levels which I am more interested in for price to come down and give us some kind of here's Bitcoin on the 6-hour time frame. Just wanted to show you what I was talking about. So there was these equal lows right here that we just swept, and also we found support on this major channel. You can see that BTC has been respecting it very well. On the way in, on the way out, we retested it again. So we've tested the top of this channel. So this is the reason, the sweep of these equal lows is essentially the reason why I'm expecting a bit of a bounce. And what else I would like to show you is that we are displaying some kind of price action which is quite similar to what was going on at the top of this. So this level is actually again very essential, where we did get a rejection over here. This was again major resistance, and just like the yearly open, we've had a similar kind of rejection. Another very important thing that I do want to point out for BTC is, I mean, again, this again depends on what time frame this move is going on to, but we do have some equal lows down here, and these are good levels to come and take out. Essentially, this BitMEX wick is not somewhere where I've been pulling this fib from, because this was exaggerated. I've been using somewhere around 3800, that's on a different chart, but I've been using that as a potential measurement, and it lines up very well with this 5300 weekly level, and lines up with the middle of this channel if we have some kind of timing to take place. But I mean, if price is aggressive, it is very possible. I mean, this 6400 level is also very strong, this monthly open. So it is, if price is very aggressive, it is possible we do end up finding support here itself. But a longer time frame correction, these are the levels I like, this 5300 weekly level or these equal lows over here. So this is very attractive for me in terms of price and liquidity. So that's the game plan for Bitcoin right now, that do look for some kind of a bounce, but eventually I would want something like this, like a fractal like this playing out, where we do end up finding another resistance, either back at the yearly open, but possibly at this trend line somewhere here with a 618 retrace and trade it back down. Also, another thing I want to highlight is this is the SPY chart. So what I want to show you is mid Feb, before we had the big breakdown, BTC had already shown signs of weakness. So we had made a lower low, we made a lower high, and we smashed it, and that's the point where the SPY started to turn and move hard. So if you look at what's happening right now, we made a lower low, we made a lower high, and we smashed it. So if the market has to trade down, I think this is a really good point for price to be able to do that, because we've had this big move up. It's basically a 100% move up on the crypto market, and also a very big recovery on the traditional markets. But I think if a turning point is here for this bounce that we've had across the board, then this is where we would start to see that weakness, and this is where we would start to see that the beginning of the correction back down to test the lows, and essentially it would have happened broad market, so market wide, BTC to come back and test if any of this support is worth anything, and the traditional markets as well to be able to reflect the same idea. So this is my plan for BTC, guys. Right now, just waiting. I mean, I am still scalping this on a low time frame. I am short from higher up, but I would like to add to my positions once we do see weakness here, to trade it further down. First, at least test this 6400 levels, but if they are to break, then we have this weekly level with channel support, which can trigger a good reaction. These equal lows can trigger a good reaction, and again this weekly 5300 level. So these are the levels I would like to trade it down to, depending on what kind of reaction we get from the 6400 level. Here we're looking at Dow Gold, and you can see that we broke both the trend lines right here, tested the 618 and made a bounce from there. So even though the Dow looks really strong on its own, you can see that against gold it hasn't had that same success. So this entire big move that we had from the 12th of February, we haven't even made the 382 retrace from that, So even though the Dow on its own looks pretty strong, We have had a rejection from this major level. This daily resistance level has made a rejection for us, and now for price to essentially retest it and build some kind of a retrace and lower lows would be more prudent. In terms of levels, these equal lows right here, again, just like BTC, they look attractive. These markets are very correlated now, guys. Crypto and traditional markets for now have had quite a decent level of correlation, so you can see a few similarities in the bounce, the loss of resistance, the loss of a big resistance level, and now equal lows possibilities to trade. So it's very similar narratives essentially. But I just wanted to highlight that even though the Dow and the traditional markets on their own in the US are looking very strong, you can see that against gold they have not had as much strength as they do appear to have. So still this looks very much risk off, in terms of the bounce that we've had, and the place where we're getting rejected from, not even reaching the 382. It still very much reflects a risk off climate, and unless we do start showing strength and reclaiming certain resistance levels like this 14 level and back above this trend line, I think this is just showing just a simple bounce after a big. Here's Nasdaq on the daily time frame. Just like I highlighted on the total market cap, the 200 billion level on total market cap, we just held this monthly level for essentially a day, but we were here for a couple of days and we lost it. This is a big monthly level, it's the 0.5 and a big monthly level. You can see that on the way up on the previous in the previous cycle that we tested it as support. It was quite an important level on a monthly time frame, and even on the way down we tested it and we had a very good reaction from it. So we failed to hold this as support, and currently we've gotten rejected from it very quickly. On the 1 hour time frame, I would like to show you what we were looking at in the Slack, and the reason that I went short on this. I went basically short on spies, but it was based a lot on this fractal, because we built a top at a major monthly level, and then we broke back down, and then we started to make this very topish looking 3 drive kind of pattern. So you can see we've done the same thing. We made a top. This is a big monthly resistance level, and then again it was just stop run after stop run after stop run all the way till today morning. So this is a very topish looking pattern for me. This is the reason I had taken puts, even though many people did not want to hold any trades over the long weekend, but I did feel that this had enough in it to build a structure like this. So let's see how our price reacts if we do come back up here. But essentially we would be looking for price to trade down, just like we are in cryptos. So what levels we would be looking at for reactions? Essentially, again, let's just go to 4 hour. It's a bit more. Everything moved so fast, guys. This move up, I think it's just short squeeze after short squeeze. So many people seeing the situation in their environment were in absolute disbelief as to how this market was moving. I mean, essentially it's just moving because there's too many people on the wrong side. It doesn't need anything else to move. And of course there's unlimited money and all of that narrative, but it's just too many people on the wrong side. Heavy amounts of puts being opened all the way up, but eventually this rally did have to run out of fuel to make its way back down, and at least give us a higher time frame retest. Even if this has to be the bottom, we do not know yet. We cannot know until it's tested. So it does make sense for price to build that situation for us now. And what levels? I mean, we have to again take this level to level. We have In terms of fibs, we have some kind of confluence here, but essentially just like BTC, there's a lot of liquidity down here, so it would be nice for price to come back down and test these levels, this weekly level 56, 71, 71.50. It would be nice for the market to come back down and test it. Whether it holds or not, it is to be seen. We are going to be alert and trading this down and watching for what kind of reactions we end up getting. Here's another very good metric for the market. It's basically Nasdaq over the 10-year treasury notes, and that's bond markets, if essentially, if you don't know that. But you can see the bond markets in 2018 is when we started finding strength. We had a breakout of a very long-term trend line in 2018, and essentially that's this is literally what it looks like, or what a top looks like. So if we are, I think, essentially to go back into a bull run, what would be very essential is for price to do something like this, for these lows to hold, and for us to move back above this. But if this is something that's on the brink of a large scale and a long-term financial depression, then we should see a weakening of this support level and price falling below this. This is a very good metric, because once we do completely go risk off, essentially bonds would be the place where the bull run would be, because there's always a bull run, right? How that works. So there are two scenarios in mind. Currently you can see that we basically had resistance. We have made a stop run of that and come back down. We have held this level, so we do not have absolute and complete confirmation till we start breaking down below this. But you can see that 2000, it's basically 1999. We don't have Nasdaq history from there, but 99 is, I think price was somewhere around here, this ratio. And what we have done is we have found support over previous tops. So it is for the markets to decide now whether we do end up going back into bull mode, which would mean that we break up from this consolidation in something like this 2014-2015 style. But if this is to be a longer term depression, and we should see this support be taken out on some kind of decent time frame, at least a weekly, wherein then this big run since 2009 goes into a longer term correction. But if we are looking for bull markets, you can see that Nasdaq, even though the last 3 years has been very, very strong, has just been in a sideways against bonds, which is very interesting, because otherwise all the way since 2009 the risk on markets were absolutely smashing the bonds. So you can see essentially when smart money has started to cash out for this move. So we have to see, it's a very interesting time, so keep this ratio with you, and watch for whether we end up eventually breaking up from this range or breaking below. This was basically define the actual economic state of not only this country but of our planet. Here's a quick look at FX. This is dollar. This is dollar's relative strength. So this is on the quarterly time frame, and what I want to highlight to you is you should just look at this the shape of what has happened. We've basically traded under this yearly level. So the DXY, the dollar index, does not look like this, but just in terms of relative strength, we've essentially built what looks like a base. It's a very strong base. It's a rounded base, and last quarter we smashed above it, and all we're doing is we're coming back down to retest it as support. And what I would say is, if this holds, you should take out your emerging market currency pairs and begin to look for long trades on those for hyperinflationary reactions. to the dollar, because this is a big breakout, guys. It's on a very high time frame. This is a quarterly chart, but just in terms of relative strength, it's basically since we broke down from it in October 2003, this is the first time we are literally like just trading above this. So this is after 17 years the dollar is breaking out in terms of relative strength to 7 other major foreign currencies, and it's breaking out from that resistance and testing it as support. So essentially it's not the majors, but a lot of emerging markets that are going to be struggling with the financial crisis that they're going to be facing with their economies, and everybody who makes the economy run sitting at home. They're going to have some trouble against the dollar if this is where price is going to hold. And this is a very long term breakout, guys. So it's just something I want to keep you aware of. If you do trade FX, I think there are some kind of consolidations going on, but again, emerging market currencies against the dollar, I think, are set to take a big hit. So this is a play that you can definitely keep your eye open for. Here's gold on the weekly time frame. On the previous review, end of March, we were looking for gold to end up finding strength and testing this 2013 yearly open. We will go to lower time frames, but essentially we have closed a week above this 2013 yearly open for the first time since 2013. So this is a big moment for the economic markets. It's reflecting inflationary problems which are coming right around the corner. And if we look at a lower time frame on the 4-hour, you can see that we made a very bullish retrace, a 382, and we reclaimed the middle of this. This is basically where in the Discord we were active and looking to trade gold up, and a very quick move up, and we have found support at this 2013 yearly open. Currently, with the current climate, do not see why any of this gold demand should subside, and this just looks like a very strong asset to be continuing to trade towards the upside now, because you can see we are headed very close to all-time highs, and once these resistance levels are taken, it's just about price discovery. But again, very strong asset. If you're looking to trade something on the long side, it should be gold. Here's a quick look at oil. I had highlighted this range, this previous range that oil traded within before making the big breakout in the 80s and the 90s. So we basically had a perfect retest of the middle of that range, and if we go to the daily, you can see that we got rejected right from the top of the range. So you can keep this range with you. I just wanted to highlight this, and I would expect oil to continue to trade within this range while we have the global issues that we have, because oil supply is going to be reducing in May. That's still quite a few days away, but that demand is essentially cut by, I would say, about 30 to 40%, and which could still increase depending on the problems of the world. But until then, I think we would see oil continue to trade within this range. So it's a very good range, and you can use this to trade oil in case you are trading commodities. If you found this video helpful, please give it a thumbs up and go ahead and share it with someone else. And if you have any questions about what we covered today, please leave them in the comments, and I will be sure to get back to you or answer them in my next video. For more trading content and education, go ahead and click on the video on your right. Thanks for watching, guys, and cheers!